Hello guys, today we'll be talking about REITs or real estate investment trusts. What are they? What assets do REITs own? How do REITs make money? Why I should invest in REITs? And then finally, the best 4 REITs you can invest in 2023. So what are REITs? REITs are companies that own or finance income-producing real estate across a range of property sectors. These real estate companies have to meet a number of requirements to qualify as a REIT. Most REITs trade on major stock exchanges and they offer a number of benefits to investors. But these REITs, what assets do they own? In total, REITs of all types collectively own more than $4 trillion in gross assets across the US, with public REITs owning approximately $2.5 trillion in assets. US public REITs own an estimated 575,000 properties and 15 million acres of timberland across the US. REITs invest in a wide scope of real estate property types, including offices, apartment buildings, warehouses, retail centers, medical facilities, data centers, cell towers, infrastructure, hotels, and more. Most REITs focus on a particular property type, but some hold multiple types of properties in their portfolio. But how do REITs make money, you may ask? Most REITs operate along a straightforward and easily understandable business model, by leasing space and collecting rent on its real estate. The company generates income which is then paid out to shareholders in the form of dividends. REITs must pay out at least 90% of their taxable income to shareholders, and that's very good, guys. And most pay out 100%. In turn, shareholders pay the income tax on those dividends. Easy, right? But why should you invest in REITs? REITs historically have delivered competitive total return based on high, steady dividend income and long-term capital appreciation. Their low correlation with other assets also makes them an excellent portfolio diversifier that can help reduce overall portfolio risk and increase returns. Those are the characteristics of REITs-based real estate investments. You know, guys, one of the main differences between rich and poor people is that rich people make the money work for them, while instead poor people like me and you probably, we work to make money, right? So many rich people just invest their money in this type of dividend stocks, for example REITs, and they just collect their dividends each month, okay? But now I will show you my 4 top REITs to invest in 2023, and I'm also invested in those, okay? So let's see. So number 4 in our list is WP Carey, ticker WPC. It's one of the larger diversified net lease REITs specializing in the acquisition of operationally critical single-tenant properties in North America and Europe. So guys, WPC has a dividend yield of around 8%, stock price around $53 and market cap a little more than $11 billion. So you would notice here that they ranked it unsafe. This is because on September 21st, they announced they're selling their portfolio of offices, around 50% of rent. So means that the dividend may actually go down, but also the stock price went down by around 15-20% since then. So you might expect the same dividend yield, okay? Just they will have less assets to work with, right? So stocks goes down 20%, dividend goes down 20%, and you get the same yield, right? So among the 4 REITs we're talking about today, this is the riskier, but is the one with the highest potential dividend. So WPC. So number 3 on our list is STAG Industrial. STAG Industrial, ticker STAG, is a real estate investment trust focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, STAG has developed an investment strategy that helps investors find a powerful balance of income plus growth. So this company, guys, is very interesting. It has a dividend yield of 4.16% today, which is October 12, 2023, a stock price of $35.33. This means if you hold one stock, you get $1.47 per year per stock that you own. And what I like about this stock here, that they pay the dividend monthly, so you can have a rental-like income. It's a very nice stock, guys. You can see that it's paying dividend for 11 years straight without even a reduction, but it didn't pay the dividend in the crisis of 2007, 2009. So it's a bit riskier than the one we're talking about later in the video, but still nice. It's still a stock I would keep in my portfolio, okay? So next up, so number 2 on our list is Digital Realty, ticker DLR. DLR, guys, is a real estate investment trust that owns, operates, and invests in carrier-neutral data centers across the world. The company brings company and data together by delivering the full spectrum of data center colocation and interconnection services. This stock, guys, gives us a dividend of almost 4% today, and it's considered very safe. It has a market cap of $37.7 billion and a stock price of $124.42. And guys, if you own one stock, you would get like $4.88 per year. They pay quarterly and they have a dividend streak of 18 years, including the 2007-2009 recession. In fact, it increased because they increased sales at that time. So guys, this is our number 2. It's very safe. Even if a recession comes, what's good about REITs that most of them, they keep paying during the recessions. So you can have really cash flow even in tough times. So this was number 2, and let's go for number 1, my all-time favorite REIT, guys. So our number 1 is Realty Income, ticker O. Realty Income, the monthly dividend company, is an S&P 500 company and member of the S&P 500 Dividend Aristocrat Index. For more than 5 decades, they have invested in people and places to deliver dependable monthly dividend and increase over time. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 13,000 real estate properties, primarily owned by under long-term net lease agreement with commercial clients. To date, the company has declared 639 consecutive common stock monthly dividends throughout its 54 years operating history, and increased the dividend 122 times since Realty Income's public listing in 1994. So there are many reasons I love this stock. I've been investing in this stock for over 5 years now to create a steady cash flow. So Realty Income, guys, it has a dividend yield of 6%, a stock price of around $51, and a market cap of $36 billion. So there are many things I like about this stock. One for sure is that they pay monthly. The second, and probably the most important, is that they have a dividend streak of 54 years, meaning that they are paying monthly dividend for 54 years, guys. And even in the 2007-2009 recession, the dividend increased. So this is a dividend aristocrat company. They pay you $3 per stock each month, and they do that for over 50 years. I mean, you cannot go wrong with this one, okay? Also, one other thing I like about this company, guys, is that their payout ratio is 76%. It's not that high. This means that they're not paying everything they make to stockholders, meaning that they leave something for them to grow and for the development, buying new properties. So that's very good, guys. It's a very good sign for a healthy company. So there you have it, guys. 4 REITs to invest in 2023. Let me know down below in the comments what you think about them. See you in the next video. Bye-bye.